Good morning, UPBOptionMillionaires.com on this wonderful Thursday, May 10th, 2018. It's about 10 minutes before the opening bell, so I'm going to be brief. This is S&P 500 Futures. We broke higher again yesterday after a choppy morning session. Look at this rally, a phenomenal rally. 15-minute candles were green for, 7 or 8 candles worth. Do the math. What is that, 2 hours straight of rally? Before the rally kind of petered out. Guess where we stopped? Right at 2,700. That's where we hit, and we started to pull back before a late day bounce. Of course, overnight, the levitation continued. And here we are, folks, over 2,700, smack up against the top of the S&P 500 Futures wedge. Here's the bottom. There's the top. And I'll pull back a little bit and show you what I'm looking for here for this market to break in either direction. You can see we've come right up against it this morning. Which would indicate the short to medium term direction of this market. We break out, will be higher, possibly new all-time highs into the summer. We break down, support break here at 2,600, and then possible move to lows that we haven't seen for all of 2018. Also, for you look, the SPY ETF, the Spiders, has a similar wedge pattern. Whereas I've talked about the NASDAQ QQQ, the 170 level as a key level to watch for. That's the head and shoulders. I'll bring that chart up in a minute. Something else we want to watch at the VIX, which is at its lowest level since this pullback started. Remember, everything was just fine and dandy. We hit a low of 856. Then Janet Yellen left, and wouldn't you know it, the VIX spiked over 50. But you can see we're starting to melt down. And again, each of these VIX spikes in the past since March 2009 have been sold off. This one's taken a little longer than usual. Several months, but now we've broken below the 15 level, and now we've hit a low that we haven't seen since back in January. That's bullish for the market. That means, hey, nuclear war off the table. We have a lot of things that have been pulling back the market. Trump was supposed to get impeached last year. I mean, there's just a lot of headlines, and that's all they end up being is headlines. Nothing ever comes to fruition, and the market continues higher. Remember all those dips we saw with Korea? Remember? North Korea was supposed to blow us up. There were missile launches. Futures were dropping, but guess what? They came back and then some, and everyone was kind of confounded the next day. Like, World War III is coming, but the stock market's up. You know why? Because World War III isn't coming. So if you look here, the VIX down to 13s. We broke here support, and if you look, there was a paint just the other day, the jobs report at about 10.4. And that's possibly where we're headed here as we break lower, which would imply higher stock prices. Of course, we got to watch for that break. Again, longer term pattern here for the S&P 500 futures. We're right up against this line. You can see a break would be bullish for the market. First test here would be the 2,800 level for the S&P 500 futures. Do you pull up some charts here? Facebook, I'll get into the SPY ETF in a minute. But look at Facebook. And I brought this chart up repeatedly. Go to StockTwits. I posted this chart with the support line. The support line worked again. You looked at the big headlines just a couple months ago, and then we're all the way back up, hit support. Now we're above this trend line. Bullish for Facebook. I talked about in my last video last week. 200 plus coming for Facebook. And I'll bring up the SPY ETF, the Spiders. You can see the wedge. We're just at the cusp of breaking out here. QQQ, that 170 level, what I'm talking about here. This actually, if you look at the wedge we've broken out of to the upside. Now the 170 level really comes into focus. See if I can get it for you. 170 right here. Now if we get to the 170 level, possible head and shoulders topping pattern I was talking about, but it's clearly not as vivid as it was if this recovery off the lows starting in March had come straight up to it. It had been a really nice head and shoulders pattern. Instead, odds are, like every other head and shoulders pattern since the lows in March 2009, going to bust through it. And NVIDIA continues to move to the upside, breaking a new all-time record highs. You could draw another trend line across here. We're up to 258 here before the bell. Earnings coming out after the close today. XLE Energy continues to roar higher. And you can see these resistance support points have worked well as kind of a launch point for XLE previously. And look at this launch point we've had here. Once we broke through this level to the upside, possibly into the 80s. We're up here on XLE. Also, USO looks very bullish. Got into some calls last week, a little early to $14 calls. I mean, you see it's really starting to move higher. We can see it move up to 20 in the short to medium term. One thing to watch on, again, you look back at the financial crisis just prior to it. Crude oil was spiking. Remember peak oil? What was it? $170 a barrel for oil back then. That was a bubble. We popped, and that kind of helped fuel the financial crisis a little bit, fan the flames, so to speak. So something to watch here as we get crude oil. Maybe we'll get some of the commodities start to rise. I looked at an earnings report recently. expecting commodity prices to rise in the short to medium term. That's something to watch for. And another stock to watch today, Roku reported earnings after the bell yesterday. Is rocketing higher. Remember that pullback it had? It had to spike up in the pullback. This was on that the Best Buy Amazon news, and that really took Roku down. You can see it's kind of recovering. It shook this news off. I saw a lot of talk, and some analysts came out talking about how that really wasn't going to affect this Roku as much as the stock was indicating. Of course, it's heavily shorted, so downside is going to be exaggerated, and so will upside. And we see this morning up over 38 on earnings. Continue to watch the VIX, VXX, and we'll watch those wedge breaks today. If it does indeed happen, it's time to really start thinking about increasing the long positions here into the summer months. It's May. They say sell in May, and we know selling anything really since the lows of March 2009 hasn't worked so well. It makes you forget, just like we saw heading into this year when the market was seemingly going up every single day. You get a couple months of downside, and everybody kind of forgets that this market has pretty much gone up for almost 2 years straight, starting at the lows in February of 2016. You know, in each of those pullbacks that we've seen in 2016, and we saw it back 2000. Remember, we had the debt downgrade back in 2010, 2011. We pulled back. Each of these pullbacks have been a great buy the dip opportunity. Remember China, we flash crashed in August, and then Ebola towards the end of 2015 in October and November was supposed to wipe us off the planet. Actually, Ebola is coming back. I don't know if you've been reading the news. Ebola is back, unfortunately. But at least the short to medium term here, we're breaking out of this wedge. The VIX is lower. The VXX is starting to get its back in beat down mode. Remember the VXX, from 120,000 down to about 25 before bouncing in January, that big squeeze. But you can see it's starting to melt down again. You draw a similar trend line across here for the VXX. We're just about there to break it. And a breakdown here would imply that it move possibly down to 30 and below, which on the flip side means higher prices for the market. And of course, as earnings season winds down, one last thing is the stock buyback blockout ends, and corporations continue to go back to buying themselves. Corporations have been the biggest buyers in this market. They've been buying themselves more than anyone else. You look in the mirror each day and they love themselves. No matter what Trump is tweeting, no matter what kind of economic data is coming out, no matter who's testing nuclear bombs, they buy themselves. UPB and Apple, $100 billion and recently announced. Qualcomm last night, $10 billion. I mean, billions. Run around billions like it's nothing. UPB, OptionMillionaires.com. See you in the chat room. Have a great trading day. Watch the wedge breaks. Goodbye.